Hey there, this is Kenitra Alam with Prosperity Capital Group. I want to thank you for watching this quick video. We're going to talk about capital arbitrage. Think like a bank and act like a bank. All right, so first off, let's define what capital and arbitrage mean. Well, capital, for all intents and purposes, we're going to say means money. Okay, so capital equals money. And then arbitrage, I went to Investopedia. I always have a tough time saying that, Investopedia, to actually give you a definition from their perspective. What it says is the simultaneous purchase and sale of an asset in order to profit from a difference in the price. It is a trade that profits by exploiting price differences of identical or similar financial instruments on different markets or in different forms. Arbitrage exists as a result of market inefficiencies. It provides a mechanism to ensure prices do not deviate substantially from fair value for long periods of time. What does that mean in layman's terms? Well, let's break it down here, see what it says. In breaking it down from Investopedia, it says, given the advancement in technology, it has become extremely difficult to profit from mispricing in the market. Many traders have computerized trading systems set to monitor fluctuations in similar financial instruments. Any inefficient pricing setups are usually acted upon quickly, and the opportunity is often eliminated in a matter of seconds. Arbitrage is a necessary force in the financial marketplace. To understand more of this concept, read Trading the Odds with Arbitrage. Well, how do banks actually participate in capital arbitrage? And how can you, as an individual, act like a bank and participate in your own capital arbitrage? That's what we're going to talk about here. Now, let's go over to Bank of America. Here we are. And I'm not picking on Bank of America. This is, typical just with any bank. This is how the banking model is set up. They're set up to take in your deposits at a very, very, very low percentage rate back to you, and then to loan that money out at a very high percentage rate. And what they do is they keep the difference between what they're paying you and what they're getting for their loans from maybe could be you in a lot of instances. You're borrowing your own money at a very high interest rate. But anyways, Bank of America, I just pulled up their CD. Okay, so this is what they're currently, as of the recording of this video, they are currently paying 0.07 annual percentage yield, and that's on a $10,000 minimum deposit. Okay, so they're going to give you 0.07%, not even 1%, on your $10,000 minimum opening deposit of a CD. And that means for 12 months, you cannot touch that principal. It's locked up for them to pay you at the end of the 12 months around $7. Is that right? Let's take a look at this. 10,000, and we're talking 7 basis points. So times 0.000. Oh no, I'm sorry. I thought it was on the other calculator. Okay, so 10,000 times 0.07%. So you're going to get a whopping $7 on a $10,000 minimum opening deposit that the bank holds for 12 months. Now, they're going to pay you 0.07. What are they actually going to make on that $10,000? Great question. So why is that? Let's go and take a look at their mortgage rates. Mortgage rates, all-time low right now, obviously. So we're looking at their arms go from 2.7 all the way up to the highest rate here is 3.7. Okay, so let's take the highest rate that they would receive, 3.731 minus 0.07 equals. So they're going to make a whopping 3.66% on that $10,000 CD that you purchase. So let's take a look and see what that is. $10,000 times 3.66%. $366. And they're giving you, well, they've actually already given you, actually your $7 is already subtracted out of there, but let's just say for grins, $359. That is what you call capital arbitrage. Okay, that's just on the mortgage. All right, let's take a look at their auto loans. And again, I'm not picking on Bank of America, just using Bank of America as an example. I have nothing against Bank of America. I don't really care, just using it as an example. Most people are familiar with this particular bank, whether you're in the United States or not. Okay, so their auto rates go from 2.49 to 2.99. So here, 2.99, I'm taking the highest rate, minus 0.07, 2.92% on your money. Not a bad day at the office. Now this is where it really gets interesting. This is credit cards offered via Bank of America. Okay. Under the terms and conditions of this one, the rates can be anywhere from 11.24 to 21.24 based on the credit worthiness of the account holder. Let's take a look at that. 11.24 minus 0.07 equals 11.17%. So let's just say, for an example, you bought a CD, you deposited $10,000, then they turned around and loaned it to your brother. What was that? 17%, I think it was. They turned around and loaned it to your brother at 11%. They actually make, in that 12-month period, $1,100 off of your deposit. Now, there's a thing called, and I'll have you to do some research on this. This is really a whole separate video, and I'm not going to go into it, but just to whet your appetite a little bit. There's a thing called fractional reserve banking that allows the bank to not just do this one time on your deposit, but to do this up to 9 times on your deposit. So if we were to take 1117 times 9, about $53 over, and this is all net profit to them, over the amount that you originally invested. And you're getting what? So you're getting $7. Yeah, that's a really, really, really cool business model. And so once this information was kind of laid out to me in black and white like this, it got me to thinking, well, if they can participate in capital leverage like this and it's legal, how can I, as an individual investor, how can I participate in capital leverage like this and it's, still be legal, right? I mean, I know I can never probably get to the point where I'm borrowing money from the feds the way that they do at such a low basis, but, how can I participate in capital leverage? And that's probably the question that you have, is how can you participate in capital leverage and act like a bank and think like a bank? I'm going to pose this question to you. What if there was a way for you to, because what the banks are doing basically is they're leveraging your capital, our capital, all of their customers' capital, right? We put up 100% of the capital. We take 100% of the risk. Why do I say that? Well, let me show you this picture here, and you'll see why. With all the bank failures, there were 37 banks in this particular graph. When 2008 financial crisis hit, 37 left 4. And if one of your banks were amongst these 37, you could have lost money. Your retirement could have been decreased by 50% or more. Just a lot of things could have happened. So again, we as customers, we put up 100% of the capital and we take 100% of the risk. So again, I'm sure the question that you have is, well, how can I participate in capital leverage? And how can I act like a bank and think like a bank? Think like a bank and act like a bank. There's a way for you actually to leverage capital, leverage the bank's capital at a 0% interest. And then I'm just going to say, for example, this is just an example, What if there was a way for you to get a return of anywhere from, let's just say 5% compounded monthly, 5% compounded monthly, even if it was just for the year, the APY. If you did 10,000, which you put into that CD, and you got 5% on it for the year, it's $500. But I'm talking about compounded monthly. What if there was a way for you to do that? What if that was a possibility? Well, here's what I want. Here's what I want you to do. I want to further this discussion and invite you to download a report that I put together. And if you're on our blog, you can just click the link right below this video. If you're not on the blog, go to takeyourlifebacknow.com. Again, it's takeyourlifebacknow.com, and read the report. See if there's something in there that kind of tickles your fancy. And just a disclaimer, I will say, I don't offer legal, tax, or investment advice. If you're seeking legal, tax, or investment advice, I'm going to encourage you to seek out a competent professional in that arena. Everything that we discuss, all the videos, the website, the reports, are simply for educational and entertainment purposes only. Thanks so much. I hope you've enjoyed the video.